In this video, we're going to talk a little bit about banking and interest rates. We're certainly not going to get into a lot of detail about the banking industry or interest rates, but it's just a general kind of survey of I think the essentials that you need to understand when you think about using banks. So let's continue on our way. So there are two kinds of financial institutions. There are depository institutions. These are the ones we think about most frequently: commercial banks, savings institutions, credit union. Again, three different types of banks. What people typically call a bank. These are financial institutions that obviously take deposits, provide loans, provide a variety of services to their clientele. Other types of financial institutions, though, are non-depository. So what's the primary difference? The primary difference is deposits. They don't take deposits from clients. They do take money, right? Securities firms, insurance companies, investment companies, they all take money, but it's for the sale of some kind of a product, if you will. So the banking institutions that we're going to concentrate on in this next couple of chapters are all the depository types of institutions. So when you go to a bank, the primary service that you want is a checking account. And of course, you know that banks offer debit cards that are tied to checking accounts. There's a lot more mobile banking going on through smartphones. It's obviously a lot more convenient than what it used to be. And they provide many online services. So I think a majority of the population probably banks more electronically than they do paper. I don't know that to be sure, but it seems to me that most people are fairly technologically aware. So they use at least some of these online banking products. With respect to your checking account, though, obviously you have to pay attention to it, right? You should record checks in your checkbook as you write them. We need to make sure that you reconcile your bank statement as quickly as possible. Now, with online banking, this actually becomes very simple. If you think about the paper kinds of transactions and information that you get from your bank, you typically get that once a month. So once a month you get it, you reconcile your checkbook to the bank statement, and you ensure that the bottom line in your checkbook is accurate. But with online banking, you can do this almost daily. I try to look at my checking account or something on the 15th and 30th when it's associated with my paycheck. So that's the periodic review that I go through to make sure everything in the account is squared away. And we're not going to go through how you actually reconcile a bank account. There are videos, etc., that you can see that can help you with this. But again, we just want to make sure we monitor what's going on. Now, if you're physically writing checks, there's something called check float. And check float is the time from when you write a check to it actually reduces your account balance. So the physical check, the paper check, it takes time, number one, to get to whoever you're writing the check to. They need to deposit. The bank then needs to withdraw it from your account. And that could be a couple days, maybe 2-3 days, depending on the mail system. Now, the check clearing for the 21st Century Act, right, a federal act, allows banks to transmit electronic images. So this idea of float, the actual exchange of paper between banks, is essentially eliminated. So this electronic checking actually can get rid of fraud at the exact same time. So this concept of float is something that we really shouldn't think too much about. Now, historically, people would play the float, right? You have no money in your check, in your account, but you get paid tomorrow. So you write a check today, you mail it, or you even take it and give it to somebody. Even if they deposit it the same day you gave it to them, it would typically take 2 or 3 days to get through the banking system. So people would play the float, if you will, with respect to writing checks. Sometimes you did well, sometimes you missed the float, and then you would have an NSF check, right? Non-sufficient funds in your checking account. Most people are aware of debit cards. It's a type of credit card, if you will. But of course, you know what it works. It essentially takes the place of writing checks. It does it electronically. Now, they talk about debit cards for teenagers, right? Again, we want to try to get parents to get money to their kids, but we need to somehow teach them or train them not to overspend. Sometimes they can do a prepaid card that basically, you put $200 in there, and then you have to manage that money for 2 weeks, right? So the students or the children can't overspend the money. However, if they need something, the money is there that they can use to buy things that they might want to purchase. There are a lot of other services in financial institutions. Some of them we use, some of them are kind of archaic and just aren't really used by folks anymore. Safety deposits are important. Obviously, people keep some important documents, some jewelry, things like that, other valuables. Certainly, we use ATMs. Everybody's aware of an ATM machine, etc. But these next 3 things, quite frankly, just aren't used that much, right? A cashier's check is just sometimes maybe a payee or somebody that you owe money to. They want a more certified kind of a payment. So a cashier's check can be written against your checking account. A money order, basically kind of the same thing. Again, it's a fixed amount. You pay for it up front, and then again, it's like a check. If you have some challenges in the past of issuing and handling money, sometimes people will require cashier's checks or money orders to make payments because in the past you have not managed your money very well. Traveler's checks were really one of the ways that we used to travel, right? There were no debit cards, so everything was a credit card if you had one. But if you traveled, typically people would buy a bunch of these checks, and then you would use those just as a check when you travel to spend for vacations or business or whatever. And again, I just don't think the traveler's checks are as popular as what they used to be. So one of the things that we'll talk about in some later videos as well is, how do you choose an institution, right? How do you determine whether this particular bank is a bank that you want to use? Convenience is the first indicator, right? I mean, a bank is a bank for the most part, right? So you want something that's close to where you work, somebody that has some convenient ATMs, a bank that offers some online banking, right? You want to be able to pay bills online if possible. What about deposit rates and insurance, right? You want to look at the rates, but banks are going to be fairly competitive. So you won't find drastic differences in deposit rates for CDs between banks. They're going to be fairly close together. I think one of the things that we should think about a little bit, though, are fees. especially with checking accounts. There are checking accounts that you can get where you'll have to pay for a monthly service. There also are arrangements where you say, well, look, if you keep an average of $1,000 in your checking account, then checking is free. But now we have to worry about that balance and keeping that average in place. So there are fees. There are always fees. This is how banks actually make a majority of their money, by the way. But we want to make sure that we understand whatever the fees are going to be, we want to make sure we understand what they are. And that's the comparison. So in the end, we're looking at convenience. Online is part of convenience. And then probably the second thing that's most important are fees. Look forward to talk to you in the next video.